Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday evening, and we are now on June 9th, 2020, about 5:40 p.m. Central Time. Well, as you can see, the stock market back up tonight. Metal markets a mixed bag. The copper trying to hold on. Other markets down a bit. A little lower in some of the currencies. Not very much follow through one way or the other in early trade. Bonds and note market bouncing. And when I looked at the API numbers, we get the EIA oil numbers tomorrow. I thought they were bearish. I saw a build of 10 million barrels. That to me is a lot. So as much as people are going around and doing things, you got to watch that. I want you to keep your eye on the state of Texas. Their cases of COVID are going up. They were one of the first states to come out and just open everything. And I think we're all taking a look at that. Now, the day tomorrow, that's going to be the elephant in the room because we're going to have the FOMC meeting. And as much as the trade is not expecting the Fed to do anything, you get into that question and answer period at 1:30 p.m. Central Time, and you don't know where the markets are going to go. They're going to hang on every word at the 1 o'clock release of the announcement. Then they're going to come, and very quickly, the markets tell you what they want to do. So if you're trying to trade stock indices going into that, I wish you the very best. I learned years ago, as a futures trader, why stand in front of a train? You don't know what's going to happen. You don't know what's going to be said. And even if you did, you don't know the reaction to it. I can tell you that. People, you say, oh, they got the report ahead of time. I've seen bullish reports that have bearish reactions. Flip-flop, the same. When we look at the S&P, there's no arguing what a powerful rally this market has been under. We're up for the week so far, 25 handles, a full point when you're on the floor. We talk handles. Market's still staying up very nicely. When we look at a daily bar chart, you can see the market has sort of gone sideways here for the past 72 hours. That's about all that you can say about it. It's still very much in the bull scenario. You have the consistent pattern of higher lows, higher highs. That's bullish. When you look at the moving averages, you had a bullish crossover just the other day, and I pointed this out to you right here, and that's where the market was at that day. You backed off, and now let's see if you go up and challenge those highs. Normally you do. I'm not saying it has to. I'm just telling you as a chartist what I typically look for in the marketplace. So that part's bullish. So what's holding this market back? And I realize you're going to say, what's he talking about? We've rallied since March, almost like we did in 2009 and 15 after corrections. I get it. But what's holding it back is what I call that fence, the upper Bollinger Band. It is an algorithm designed to keep the market trading within it 95% of the time. You don't fight that band. When the market hits it, I think the pros are taking money off the table. When it drops away from it, if all systems are go, I think they're using different methods to come in on the break to try to get it back up there. When you have an embedded reading, which means the momentum is locked in bullish, until that goes away, in my morning subscriber video, I point out those moving averages that I think the pros are using to enter the market on these small breaks. In the NASDAQ, it's the identical story. You're riding the upper Bollinger Band. Now, what happened today is the NASDAQ was strong as the other markets backed off. Why not? For 3 or 4 days, we've watched the rotation take place, carrying the Russell, the Dow, and the S&P. Now they backed off with some profit taking probably in front of the FOMC meeting. So the NASDAQ's chance to catch up to where they were. That's how bull markets go. They feed on each other. And until it's over, folks, you don't fight them. In the Dow itself, you're not getting up and staying over the upper Bollinger Band. You're backing away. Now, here's something to keep your eyes on. If you lose the embedded reading by the red line turning and closing under 80, whenever that occurs, it'll be a sign the market has made a short-term peak. I don't know if it's longer term or not, but the odds are that it wants to go challenge the closest of any of these moving averages. Just remember that. In the Russell, still the embedded reading. Now, this is called a key reversal down, an outside day down. Why? Because it's the highest high the market has made, period. And you took out yesterday's high, low, you closed lower on the day and under the opening. Okay. if you take out today's high of Tuesday, on Wednesday or Thursday, the odds favor then that you're going to go back and challenge the closest moving average above the market. I don't have any above it, or the upper Bollinger Band. Until that occurs, the market goes into a pause, and that's where you're at. In the Vix Cash, you know what I told you. I think the pros right here went short this market. They got a nice little lead now. They may not wait and hold this to get to that moving average. You have the FOMC thing, announcements tomorrow, but they certainly were able to get into this market in the neighborhood here. Where's the first time that it hit this? That's what I'm looking for. 24.66 was the first time, and now the market is back up for them to 25.68. So they've got a full point in the market. Is that enough? I don't know. We'll see if the market gets up to that number, but don't be surprised. You know, a lot of us that have been around this, we don't like to play games with the Fed. Now, you lost your embedded reading. Often you go to the closest moving average so you can see which one. In the T-bond market, we've got a pattern of lower highs, lower lows. This is the market I thought would rally. Why? Do you really want to challenge the Fed and take yields up? I don't think so. So we've seen the bounce from the 100-day and the lower Bollinger Band. The market's first attempt here at the lower Bollinger Band again broke through it. So we had a downside breakout. I haven't lost sight of that. Two closes in the lower part of the day right under it. You carry through into the 100-day average. That would have been the initial downside target, the way that I teach charting. And I'd be looking to see more resistance show up at 176.17. But in front of an FOMC announcement and a press conference, I'll be out having lunch. I'm not going to do anything in terms of new recs for my clients or any of that. In terms of the 10-year note, same thing. You had your downside breakout. Now you're back into the Bollinger Band. Let's see what it does. You'd have to get over these highs to convince me this was a false breakout. Otherwise, on rallies, a day from now, 2 days, I may have a very bearish attitude about the market. Dollar index, I am still in the bear camp. This market's still running the lower Bollinger Band, fully embedded reading. It's going to take some news out of the Fed to change this pattern. This is a breakout to the downside, and you have a breakout to the upside in the Eurocurrency with the bullish embedded reading. Market lifting, could it get up to these upper numbers in front of the Fed announcement tomorrow? Well, you've got it over right now. You got a full day and a half to worry about that. In the Japanese yen, when we started coming back and losing the embedded reading, watch this. We were looking for, this was just yesterday. I said, look for the market to possibly get up and challenge the 100 and the 18-day average of closes. You did it. Now you're just sort of hanging here. Market went neutral on you. Now you wait for the FOMC. Their statement affects a lot of things tomorrow. You went flat again in the Bitcoin. You had been having a pattern of lower highs, lower low, but now you reversed it. You're just flat. You have no trend in the swing line. You got lower highs and now actually lower lows and a higher high, and it just broke through everything. There's nothing there. The differential between Brent and WTI, well, you did go up, and you can see you challenged just recently that 18-day average of closes only, and it's a close-only chart, and you slipped away from it one more time. That means Brent's a bit weaker than our WTI. You can see you've lost the embedded reading. When I see a lost embedded reading, it turns me to the idea that I think the longs will likely bail, looking for the market to retrace to that key moving average. They don't have to. Not everybody listens to me, so what's the difference? WTI doing the same. For my money, if the market gets a piece of bull news, there's other ways to get involved. But I think the smart money, I wouldn't be surprised if it starts running for the hills here and just sits a little bit. They're not doing it yet in gasoline. You haven't lost that reading at all, so they're still friendly, but resistance very clear here, the upper Bollinger Band. And in the nat gas, the market is still very much in the bear play. We're still going to see gas coming online. You know, I've been mentioning this to you, as more wells get prodded, you're just going to keep getting more and more product. That is a real problem for this market. Remember, we write about all this all throughout the day and evening. Our staff, it doesn't matter if we're in the offices, we're at the Chicago Board of Trade, but the simple fact is that they write, and they write, and they write, and they write. You can get their newsletters for a limited time if you're not a client of mine or a trading account with me. You can either have subscriptions and or a trading account, ideally both. But, you know, we don't try to be a zero commission broker. We can't. We're not a bank. We can't do those things. What can we do? We can hold your hand. We can talk to you the old-fashioned way, and we're bringing a lot of knowledge. There's a difference. You can get telemedicine, or you can go visit your doctor. You decide which one's best for you. In any case, if you'd like to try our products, all you need to do is give my staff a call. They'll be happy to work with you. Go to our website. You'll see our free offerings. Sign up there. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.